Hi guys, welcome back to this week's video. Kayong here from Alpha Play Chief Currency Strategies. This video we'll be talking a little bit more in depth and discussing more about the market itself, alright, going into next week. So if you need some time, alright, pause this video, get yourself comfortable, and then because we spent some time talking about it, and I expect this video to be slightly longer than the previous kind of weekly video that we released. Alright, so if you need to, get yourself comfortable and let's dive down into the few things that I would like to talk to and share with you in this particular video. So the first thing I want to walk you through is, of course, looking back into last week, alright, what are some of the events that happened? Alright, basically in terms of economic data, it's a pretty quiet week. Not much in terms of, what are some of the things that released and such, but the only key focus that was interesting as of last week was the FOMC meeting minutes. Basically, it's a very balanced view. But in terms of data point of view, we can see China PPI, alright, coming in at 0.1. It's the first time in many years that it goes into the positive territory. Right, and this of course gives some boost towards the Australian and the New Zealand dollar as well. And of course, if you look at this in terms of the Friday, right, 10 p.m. In terms of US prelim UOM consumer sentiment is again one of the interesting data because it's one of the lowest in years, alright, 87.9. Not years, sorry, in months, alright. And of course, this is because of the elections that's ongoing. It might have affected the consumer sentiment towards the economy and the confidence towards it as well. And of course, Friday, depending on where you are, right, in Singapore on Saturday morning, basically this is in Friday afternoon. We have Fed Yellen talking, giving a speech, alright. And of course, if you click into it, this will land you to the government website. And if you read on the speech, basically, she talks about, talking about monetary policy and such, about macroeconomics. But basically, the tone over here, if we analyze into it, is more towards a dovish stand, right? But it doesn't mean that rate hike in 2016 December is off the table, right? It's still pretty much in play potentially. We never know, alright. But the tone from Janet Yellen from this speech itself is pretty towards a dovish stand. So what does that mean to the dollar is that we might expect a certain sell-off. For next week itself, we might see some selling pressure going on to the dollar. Alright, but of course that one, we never know until market open, and we need to further analyze, how are the current sentiments in terms of, moving in the market itself. Alright, so if we look into next week economic data, we also see that, just a quick glance, you can see it's a very active week. Alright, we have a lot of tier 1 important data. So if you start on Monday, right, it's still okay because not much that's ongoing, but the Euro CPI might be the one that you want to focus on. But starting on Tuesday after that is a very active week itself. Right, because Tuesday we have New Zealand CPI with Australian monetary policy meeting is definitely important. Followed in the US session, we have the US cost CPI. Right, this will be a key data because you need to. Right, the Fed itself is also tracking on whether inflation is on target. Is it moving towards their 2% target, and this will give some guidance as to whether the Fed will increase interest rate or not in December, right? And then of course we have the New Zealand GDT price index. This is important, right, because it might present some selling pressure or buying pressure on the Kiwi itself. Following that, on Wednesday we have the UK Clement Count Change and Average Earning Index. This one we shared with our traders as well, that as of now, the driver that is moving the pound wouldn't be much in terms of economic data and economic performance, but it's a lot on the sentiment aspect of the market, alright? So if you're trading on pound, you need to be aware of what is moving it as of now. So if economic is not the one key drivers, you might want to take this as a second tier kind of information to make a decision on your trade. And of course on Wednesday night, alright, we do have Canadian BOC rate statement as well as their interest rate. It's expected to come in similar. We do not expect a rate hike or rate cut, but read into the monetary policy report as well as their statement because it might provide some forward guidance into how for this entire month, what is the outlook and what is the expectation from BOC itself, because that might drive prices in the Canadian dollar itself. And on Thursday, we have Australian employment change and unemployment rate. This will be important and significant to the Australian dollar as well. Right, as of last week, we did see some strength in the commodities currency. So we need to pay attention if you are trading onto this. And of course, on Thursday we have the Euro minimum bid rate and the ECB press conference. This will be interesting because we did see the euro dollar dropping below the 1.1 strong psychological level. Alright, so it might play out. This is important because it might provide again a certain sense of directional bias after the press conference, depending on what Draghi has to say about the euro. And of course, ending off the week, we have Canadian core CPI and retail sales. This is going to be important as well. Right after the POC rate statement. So these are important economic data in terms of giving you an overall fundamental picture of how the economy and the countries are performing. Right, but for those who have been trading and experienced, right, especially those who just graduated from our fundamental and sentiment masterclass, you know that the things that drive currency, right, is not just your chart, definitely, and it's not just the fundamental, but it's also the sentiment, the risk appetite in the market, all right, whether investors and traders are confident in taking higher risks or not, right? So that's about risk appetite, market risk environment. Right, and if you look into the earnings report, right, this is talking a little bit about stocks as already, right, because this will definitely impact whether it's going to be risk on or risk off. Right, so you need to factor in all this when you make a trading decision as well. So next week itself, if you look at the stock earnings releases, all right, you have major companies earnings release, right, like Bank of America, IBM, Goldman Sachs, Intel. Right, even Yahoo, alright, and if you look down the list, Morgan Stanley, alright, we do have some major companies like eBay as well, right? Major companies releases, earnings releases coming in next week, alright, McDonald's, Microsoft, you can see all this coming in. Right, and of course these are all very popular companies as well, PayPal included. So when the earnings release comes out, right, it definitely gonna impact the company's stock prices, and that will translate into your S&P, your Dow Jones, and that directly impacts the equities market, right? And for those who are aware, right, and understand the relationship between equities market and currency markets, they are correlated, right? So you need to look out for all this events that's going to move the currency market as well, because just for to make things simpler, all right, if the earnings comes in very bad, all right, and we see a dip in the equities market, that will directly impact the risk environment in the financial market, and because of that, it will affect a certain movement in the currencies market as well. Right, so if it's a risk-off environment, then you see, currencies like Japanese yen strengthening, like safe haven currencies will start strengthening, and then your commodities currencies like Australian and New Zealand will see a dip. All right, and of course it's vice versa. So if the earnings comes in positive, all right, the outlook is good and such, equities markets start to rally, funds will flow from safe haven currencies like the Japanese yen towards riskier currencies like Australian and New Zealand dollar. Alright, so you need to understand all this, how it flows. So this is some of the dynamics that you need to take note of when you're trading the FX market itself. Alright, so this is a very gist and simplistic way of looking at it. Alright, just to share with you guys, a little bit of how we analyze the market and some of the things that we take note as well. And next week is gonna be important because you can see over here the earnings report from major companies are huge. Right, so take note of this, and of course, this is all on top of the economic data that you see in your Forex factory. Right, so this is about the overall fundamental and sentiment outlook that you need to monitor if you're trading next week. So I'd like to now go on to sharing with you some potential setups based on technical as well. What are some of the opportunities that you can take for next week itself, right? But let me go over to some of the review, all right, and share with you the importance of trading plan as well. How you need to plan ahead so that when the opportunity arrives, you know how to maximize that. And you don't react based on your emotions and then you screw up your entire trading psychology, right? So I'd just like to do a quick review and share with you how you can manage your trade, and the importance of having that trade plan enables you to make disciplined kind of decision, right? So the two trades I'd like to share with you is first is New Zealand dollar. This was identified last week, all right. So again, I want to show you that the process that we do over here, we always plan our trade before the week, right? And these are all on swing trade ideas, meaning we are trading on higher time frame like H4, like this. All right, so we identify the key levels that we are interested to take a trade for this Kiwi yen, the New Zealand yen pair. All right, the level that we're looking out for as of last week, all right, was at 7288. All right, so it's around 72.90s, right? And we are looking for an opportunity to buy this trade. Right, so later I'll go on to the chart to show you that this trade has been done. It means price actually dropped, and then after that it rally once it hit this key zone that we are watching out for, right? But we do have a subsequent trade opportunity for this particular pair as well. Alright, so I want to share with you how you can manage your active trade and follow the market process, and take opportunity as it comes. The other one is Chef Yen. Alright, we identified this as of last week as well, and the key level they were looking out for is at 104.75. Right, and we did see market drop and then it rallied around. Right, so let me just go over to the chart and show you what I meant. Alright, so this is on Kiwi yen. Alright, again, it's on the H4 time frame. So the setup that you see previously, alright, was over here. Alright, so we identified this, and this you can see price took off and then it rallied. Alright, so how we manage if let's say you are still on this trade, alright, running on trailing your stops and wanting to make full use of this trade, how you can play this out is that we do have another potential setup forming on this particular pair, right? So normally the first step that we want to do is always look at what is the environment in terms of technical charts, right? Is price trending or is it ranging? All right, so if you look at this time frame itself, you can see price is currently in a range environment over here. All right, the bottom of the range, the top of the range. So what we do is that we adopt the advanced price action. So advanced price pattern strategy when price is in range. So if we draw in our fib, alright, we can see that price make a swing down over here and then it did a retracement towards the 50% Fibonacci. Alright, so those who are familiar with this, we do have a pattern forming. Alright, and the completion is at the 88.6 Fibonacci level. Alright, so just now, if I just delete my fib, alright, so this is the level that we'll be looking out for next week. Let me just drop in my horizontal tool. Okay, it's in different color. Alright, good. So this is the level that we'll be looking out for next week. Alright, and just now what I want to share is last week we identified this level at the 88.6, alright, and you can see price touches it and then it rallied. So for those who are still running on this trade, okay, basically you bought here, alright, so what you are waiting for is if you haven't take profit or haven't shift your stop loss to protect your capital, you should definitely do so. Alright, for those who are riding it, alright, and trailing your stops, you can potentially target to take profits off when you have another setup coming over here. Right at the 7450 level. So that's a potential sell area that we're looking out for. Right, and if price rally back up, right, towards there, we'll be looking for a sell trade and looking for it to bounce back off that area. Okay, so if you're already running in the previous trade, all right, you want to take profits off your trade over here and perhaps flip your position from a buy position to a sell position. Right, and of course all this when I share with you is purely based on technical, so you need to also take into account how the fundamental of Kiwi and yen is playing out in terms of risk environment, because this particular currency pair plays on the risk environment very well. Okay, because of Kiwi and a combination of Japanese yen, it's a risk environment play. Alright, so again, earlier in this video, I shared with you how the earnings will affect these two currencies. So you need to take note of that when you're trading onto this as well. Right. So next week itself, the key level. Again, I'll just clear off everything so the chart becomes clean. Right. The key level to watch will be over here at 7450. Alright, looking for an opportunity to sell. Your stop loss. Right, let me just key this in so it becomes clearer for you guys. Your stop loss has to go above the previous high over here. And what we usually do is want to add in a little bit of buffer, all right, so that eventually if this becomes a resistance, we do not want to get stop out at that point and the price starts to turn. So we want to give it a little bit of buffer, in terms of room for price to move around. Usually what we do is I'll give it about 25 pips. Right, so if my stop is around 747, the previous high is 747, I'll add a little bit so it becomes 74 around 7495. Alright, so it's about there. For targets, usually we use a lot of Fibonacci, but to keep it simple, you can put your target at the previous structure. Alright, so structure simply means support, previous support and resistance. So you can see this is a minor one over here. Alright, price respected here, some form of reaction. So you can set based on a simple support and resistance, right? And you can see your risk to reward as long as it's at least 1:1 or more than 1:1. It's a pretty decent risk to reward, alright. So you can set your target based on that. Alright, and of course, if you are trading on a range, right, upper range and the bottom of the range, you can even set your target all the way at the previous bottom area of the range, alright, and you can see your risk to reward can increase significantly, right? So this is one potential setup to share with you, alright. Target to area to look out for is at 7450. Okay, the other one, like we shared with you, alright, is Chef Yen, alright. So just now, previously last week we looked at 104.75. Let me go over to the chart to share with you that one Chef Yen. Alright, I have to key that in. Okay, let's look at that 10475 over here. Alright, so last week we identified this trade. Alright, you can see it bounces off, come back, and then it bounces off again, now running in small profits. So this one again is a very simple support and resistance play. Right, the horizontal level, you can see resistance turns support. It broke, it comes back from a resistance, it broke down further, and then a resistance, and then eventually break up, now forms a support. Right, that's why we identified that level and took that trade itself. So for now, moving into next week, we do have potential setups coming in as well. Again, right now, if you focus over here, this is the upper boundary. Price is currently in the range. Alright, you look at this. This is the upper boundary of the range. This is the bottom boundary of the range. Price is not moving in any particular direction. We tend to use our strategy to tackle range, which is advanced price pattern. Pull in our fib. You can see that price from this swing low to this swing high, it retraced towards the 50% Fibonacci. Right, so that gives us a potential pattern. Completion is at the 88.6. Alright, so this setup, alright, we are looking at this area down at 103.25 region for a potential buy. Alright, so if price drop further all the way to the bottom of the range at 103.25, we'll be looking for a buy setup. Alright, so for traders who have entered over here as of last week, right, and you're currently enjoying a small profit, how you can deal with this scenario is you can start moving a stop loss, right, to break even to protect your capital. In the case that price do not move towards your target and decide to drop further, right, at least you are protected. You get out with a minimum profit or at least a break even trade. There's another setup ongoing over here. Alright, if we look at this particular portion and we start to draw in our Fibonacci level as well, you can see from this swing high to this swing low, price retraces up to the 61.8, right? And that gives us another pattern that looks like this, and the completion is around the 786 region. Okay, so if I just clear this, alright, and I'll drop in a horizontal line to look. Alright, so this is the area 106. It's a very key psychological level as well because it's an even number. Alright, so it is a confluence of a pattern as well as the even number itself. Alright, so this gives us confluence in taking this particular trade. And again, if you entered this trade on last week, right, you're still riding it, you can potentially aim to take profit off this, alright, at 106, and then switch, take profit off that trade, alright, switch your position from a buy setup to a sell potential trade. Okay, so you can actually sell and then expect price to go lower. Right, so let's play out, and plan it such that, if price does this, it rally up towards this, you take a sell, you can potentially, alright, so if I put this in, if let's say we sell it, alright, our stops will be slightly above this, alright, I'll plus in the buffer to give you about 70, 1067, alright, that will be sufficient for you, alright, and target, alright, you can go as the normal, basically using support resistance, this is your TP1, or because of this potential bigger pattern setting up, alright, you can actually write your second target all the way towards the completion. And with this kind of trade, you can see the risk to reward is 1:3.8. Pretty decent, right? But of course, in order to do all this, you need to always plan your trade, right? And that's why your trading plan is very important. You need to start projecting how certain scenarios is gonna play out in the market, and when they do play out as what you have planned, you are prepared to take that opportunity, alright? And you are already thinking and planning it before you actually entered the trade, and that gives you, that more rational decision instead of an emotional and a psychologically affected decision. All right, and that's why a trading plan is super important. All right, so just to keep things review a little bit. All right, two key levels as of next week on the franc Japanese yen. All right, it's at 106. All right, even number. We are looking for opportunity to sell the market, and at the bottom level is at 103.25. We are looking to buy the market itself. All right, so in this video, the last one I will share with you, the last setup. All right, our potential one is on Kiwi dollar. All right, Kiwi dollar is slightly different. All right, that's why I want to share this trade opportunity with you, because the setup is different. All right, just now that two pairs, what we shared with you was a ranging environment, but as of now, if you look at the New Zealand dollar, you can see that a swing high to swing low, all right, and then it did a retracement and price broke the previous swing low over here. All right, so technically, in terms of technical analysis, you are actually seeing a downtrend, right? So when market is in downtrend, we adopt a very different strategy to tackle different market environment. So when it's downtrend, we are looking to trade the retracement and follow the direction of the trend. Right, and we use a lot of Fibonacci. So you can see when I pull in my Fibonacci from the previous swing over here to the lowest swing that is established, the 61.8 retracement confluence with our previous structure. All right, 1 time, 2 time, 3 time before a break. So we do have some kind of structure, support, turn, resistance right now. So what we are waiting for is for price to rally higher back towards this zone at 7240. Right, and we are looking for an opportunity to short the market up here. All right, stop loss again. I won't go in depth in this video, but basically your stop loss can go above the previous structure high, and then again add a little bit buffer towards it. Or alternatively, you can set your stop just above your previous smaller swing highs. All right, right over here. All right, so you just add a little bit of buffer again. Alright, there's no right or wrong, but you need to understand yourself, your personality before that trade plan suits you. But I'm just sharing with you certain ways that you can actually deal with it. Your target, right, can go all the way at the previous low, and you can look at the risk to reward is 1:2.2. Even if your stop loss is slightly above here, you still have a risk to reward of 1:1.26, a pretty decent one. Alright, and this is of course if you set your target at the previous low. Right, so I just want to quickly share with you this opportunity as well. The level to look out for is at 7240. All right, you can see that we don't fix our strategy with only one kind, because market has various environment. We need to have at least two kinds of strategy to tackle the two different market environment. Right, one is trending, one is in the range environment. Right, so that's it for this week. Video. Alright, I hope that through this sharing you get a better insight into some of the things and correlations that's happening in the forex market. What are some of the fundamental economic news that you need to take note of? What are some of the sentiment aspects that in the financial market that will affect the movement of your currency market? How you need to take note of this, both things, and then going on to your technical charts, how you can what is the importance of trading plan, how you can plan your trade ahead before it happens, how do you manage certain trades, let's say if you have conflicting ideas and such. Alright, hopefully all these things give you a better picture, overall picture of how trading is. Alright, And if you have any questions, again, always feel free to drop your comments below, questions below in this video as well. We'll always answer all the questions that you guys have. Alright, and of course, if you have any things or topics that you want me to talk about in our next week video, feel free to drop your ideas below in the comment. Alright, other than that, do always manage your risks. Alright, and I'll talk to you in our next week video.